Traders, welcome back to our price action trading lesson. We're looking at S&P 500 M&A futures. Today is FOMC announcement day, which means the market can be very slow before the news. This is typical because most traders around the world, they're waiting for the FOMC announcement if it's going to be significant or not. So a lot of times what you will find is the structure is going to be very choppy, and these FOMC days tend to be quite uneventful and unpredictable. So this is something you need to keep in back of your mind, that it's completely normal for price action to be unclear because it's FOMC announcement day. After FOMC comes out, market can be a little bit more volatile, so this is something you need to be prepared for as well. So now we have price action working lower. We have a downtrend breaking new high. Prices are pushing back below EMA, and because we want to follow the main bias in this market right now, it's not a strong downtrend by any means, but the bias is bearish. This trend down needs to get new low. Our thinking process is to look for some short opportunities to test the new low for this leg down. You have a micro double top count reset, so we have first entry long, and this right here is a lower high confirmation setup, but the problem is you can see how far it is from the EMA. We cannot take a setup this far from the EMA, especially since this is not a strong downtrend. This is just weak structure overall, so I can't take it. But a failed second entry long is already a second possibility for you how to jump on board to get new extreme. And now we have it. We have a double top, first entry long, pullback, second entry long. It failed right at the EMA. If there's going to be a break below this bar, we can consider this as a failed second entry long. And this is decent high probability setup because it is with the direction of the main trend. Downtrend needs to get new extreme, and it's a great signal bar. Market is correcting. First entry short, we need a second entry short, and market tested a break and pushed to new extreme. So downtrend played out. You can see spike down, sideways price action with bearish tilt, breaking new extreme. So I'm pausing, looking to go short according to trendline rule. This is how I'm following the price action. We're breaking above EMA, and now I was honestly expecting a failed second entry short, lowest low, first entry short, pullback, second entry short failure. I was really thinking we're going to get a reversal pattern simply because there is no good broader channel. Everything is too broad. This is too tight, breaking new low. It's overall quite sideways. So remember, when the trend is weaker and weaker, you can have reversal pattern more. There can be high likelihood for reversal pattern. The stronger the trend is, the more I'm hesitant to predict quick reversal. So we need to stay above EMA, get a reversal pattern. That never formed. You have felt second entry short technically above this bar. Of course, you cannot go long above bearish bar. Even here, had there been trigger, I don't like going long here because it's now below EMA. Remember, EMA needs to hold for the reversal pattern. We ended up going higher though. I'm a little bit patient, breaking new high. What's gonna happen? I can't take anything now. And because we keep working higher, I'm now gonna widen the channel. So it really looks structured. At this point, I was really expecting, okay, we may have some nice uptrend on our hands. I'm thinking about second entry long at the EMA. Market keeps going higher, so it really looks great for the uptrend. But notice market suddenly dropped lower. And this really caught me off guard because why we suddenly reverse all the way down here. You can see how nicely the channel fits. It created some double top, so I can predict small consolidation. I have no other option. You can see flat EMA, consistent pricing up and down. But this is important. Why there is no new high back below EMA in the middle of the trend range? So now I'm confused. Now I'm confused because for some reason there was no new high. The trend range is just getting established. Market is correcting, and this brings us to this second entry short, new low, first entry short, second entry short. Very tempting setup locally, but we cannot be pattern traders. Context matters. And like I talked about, why this uptrend didn't get a new high? What's this all about? We dropped all the way down here. You know, downtrend was supposed to be over. I didn't take it. I don't like taking this, but it's such a tempting setup locally. I'm forced to market. If you took a chance here, I can see why the signal bar is so perfect, but you know, you can see how many confirmations this uptrend has. Break below, why there is no new high. We're in the middle of this consolidation that is about to be developed. To me, the context is just about to be established. It's too unclear, too many opportunities and possibilities, but it is a decent local setup. So if you're a novice trader, it's very tempting to take it. Market ended up going all the way down here, breaking new low, so downtrend played out. We're in no man's land in the middle of the trend range, so remember, I don't want to take a setup in no man's land. We're pushing higher, so I'm going to draw uptrend working higher like this. So now I'm once again thinking about potential bullish reversal if this is going to be trading range, but we drop lower again. So this is now indicating that I have series of lower highs and series of lower lows. So once again, why there is no bullish reversal, another lower high, it looks like there is some potential bearish imbalance, and for this reason, I'm not going to go long here. Normally, I would buy the bottom of the trend range or some high low. Even this high low work for a big scalp. You know, if you want to take a risk here, just like here, you can consider, but I'm a little bit hesitant to go long here because this was not supposed to happen. It's too bearish. Let's see what's going to happen. This is pretty much the last attempt by the bulls to show some reversal, and we push lower again. Okay, so definitely I cannot be buying this now because once again it's too squeezed, too many lower lows. You can see this is not acting as a trend range, okay, because as a trend range is supposed to go from the bottom all the way to the top. It's failing here, it's failing here. So this is exactly how you can real-time recognize bearish imbalance. I don't like structure like this personally because the trend is too weak. You're always forced to be selling at the very bottom of this potential key level, but at the same time you can't go long because we have weak bearish trend down. So this is area where you have conflicting variables, and if you find yourself in a situation like this, you have to remain patient and disciplined because remember, today was FOMC announcement day. This is why it's so choppy and it's so hard to trade. Not uncommon. So I just don't see good opportunity. Can't really go short at the very bottom of the move. Yes, the second entry should work, but it's not the greatest. You know, first entry or second entry should double trap, but look how sideways this is. This was tempting short, but it's just so sideways. I cannot sell at the bottom of the move like this. I'm going back and forth thinking that this downtrend is not valid. It's just too messy. It's too sideways for me to sell at the bottom. At the same time, it's too bearish for me to go long, and by too bearish I mean you can see the series of lower highs. So I just have to be patient here. Nothing I can do. It dropped lower again, break, and the new extreme. So I'm just being patient here. Not a good structure. Break a new high, pull back lower once again. EMA flat, not clear structure. Market is reversing higher. We have a brand new trend established, and this is interesting. This is one of those few decent setups because this spike up needs to get new high, second entry long. Once again, overall structure quite unclear, so this is not the best structure to trade, but it is second entry long. It is a two-legged pullback, you know, decent setup to consider given the fact that today was quite a messy structure. On a day like this, what you have to keep in mind is you need to resist the urge to just take a setup because you come here every day as a trader. It's part of your routine. It's a job, and you kind of feel forced every day to take a setup. But that's the skill set that you also need to have. Just control yourself, remain objective and vigilant, and you want to follow the price action rules and you want to be a good trader. You cannot simply be forced to take any setup simply because it's a brand new day in the office. Your goal is to be a good trader. If you're a good trader, no money will flow, but you know, breaking new high, so you cannot be just pulling trigger. If you're not sure if the structure is designed clear, you can see what a messy structure, breaking new high, so uptrend played out. Okay, market drop lower suddenly, break, push to a new extreme, massive reversal up, so I'm gonna adapt to this, uptrend working higher. EMA keeps holding, so this is confirming this bullish trend. Horrible bar here. You know, this is good setup. Visual two-legged pullback, mini count reset, so like a first entry long, second entry long. This is decent setup. It's a bit big, 4.75, so you can use limit order. It's still 12:24, so you have time before FOMC. You want to generally stop trading 30 minutes before the FOMC announcement, but it is a decent setup. I can see that there's a gap, so your limit order wasn't filled. But decent setup, brought two legs down, uptrend is new high, EMA is holding. So one of those screener structures. As you get closer to the FOMC, you want to be patient. There's a failed second entry long, but it's too close to FOMC and it's snuffled at EMA. It's too far down, so I can't take it. Anyway, second entry short would be good. You have a second entry short now. Ended up working, but I simply can't take it right 10 minutes before the news. You can see spike in volatility. Market is chopping, so I'm going to draw a leg down like this. You know, I'm regularly zooming out and trying to make sense of what the big structure is. So very hard to find a big pattern. Let me see, there's some bigger downtrend, you know, maybe, but it's simply too broad, doesn't fit that well. If I draw this one, it has a break, overshoot, new low, but no confirmation. So I don't like drawing any wider channels simply because it's not structured at all. It's too sideways with bearish bias. I don't see no good short setup here. Definitely no good long because simply it was too bearish. So I have to be patient here. Okay. Quite a strong bullish spike, so we can get a second entry long at the EMA. No, we broke lower. More confusion. So I'm just simply waiting for price action to do its thing. All I want to see is some established structure where there is no conflicting variable. You have a spike and a channel pattern, so I'm going to draw a spike and a channel pattern. Okay, we're correcting to the EMA. This is not the strongest uptrend, but spike up channel pattern. I expect new high to be tested. Can I get a second entry long? Second entry long technically triggered above this bar. Of course, I cannot go long above bearish bar. You know, this is not double trap. This has to be counted as a failed second entry short. It is quite tempting setup, but it's way too big. 6.5 points, basically unenterable. So you can see downtrend break, attempt to test new low. EMA keeps holding me to get new high, but it's simply too big. Uptrend played out because this high is higher than this high. I was expecting reversal pattern because uptrend played out. That never happened. We pushed back above. So I'm going to redraw a small consolidation. Redrawing the downtrend, working lower. I was thinking that I may go long here, 2 legs down at the key level. But we broke the key level completely. This is not what I wanted to see. I don't like fading the breakout, even though most breakouts will fail because the uptrend played out. And you have some lower highs. It still works for a scalp. But, you know, it's easy to fade the breakout if you have the uptrend in play and you expect the new high. And given the fact this is FOMC day, you know, uptrend played out. Neutral bias, not that clear. I was thinking we may get a failed second entry short back into trend range. Failed second entry short triggered above very doji. This is a terrible bar. This is no trade bar, so no good signal bar, which was good because it ended up working lower, so it was good there was no setup. In hindsight, there's a bigger downtrend with small overshoot, but it's too unclear. I don't think we can take anything. It's simply too sideways. Break, new extreme, spike up, can get a second entry long before we're gonna get the new high. Break a new high, no second entry low, market reversing down, so I have to redraw a brand new downtrend like this. New low for the entry short, and now we have second entry short. Finally, a good clean setup. It's too late because the market is gonna close soon, but you know, educational perspective, 2 legs up, great signal bar, downtrend is to get new extreme. Spike down, and market is about to close now. So this is the overall structure for today. Typical FOMC announcement day. If I'm going to zoom out, you can really see the directionless price action we had today. I didn't take any setup personally. Every single time I was waiting for structure, some clean structure to be established. Market just started whipsawing up and down. So this is not structure that I'm comfortable trading because it's simply too risky. Remember, I won't understand with the context, clear key entry point, and a good pattern. And today's simply FOMC announcement, they just oscillating up and down. So once again, consolidation with bearish bias, break, new extreme, and then we had just spike up, spike down. So yeah, not easy price action. I hope you remain patient. If you didn't take a setup on a day like this, it's definitely nothing to be ashamed of because it was quite all over the place. But the FOMC is done, and tomorrow we're back at it. So I hope you had a good trade. I'm going to wrap it up. I'm going to talk to you next time. Good luck in your trading.